Hola, mis amigos, mis amigos, mis amigos. Susu here. How's everybody doing? You know, it's been a little while since I made one of these specifically for the purpose of discussing stocks, but sometimes we just have to do what we have to do. Now, let's not forget, there is a yield curve inversion that's nearly taking place. It happened. You know, and it's something that once it happens, it's not like, oh, well, it happened, but it's not happening at the moment and went away. Once it's happened, that can be a problem for a long time. So consider that. Of course, that's when like the 3-month treasury bill where the interest rate actually, you know, gets larger than the long term. Because, of course, that doesn't make sense. If you're going to, you know, have money for a longer period of time, often the interest rate will be higher. So for instance, 3% for the 10-year, and then, you know, it might be like 2.5% for the 3-month. And when those two invert, meaning the shorter term is actually earns more interest than the longer term, that signals that there's a lot of focus in that area, of course, because supply and demand. And you end up in a strange situation where that may determine something in the short term. Could be, you know, 1 year to 3 years to 5 months. We just don't know. And as long as that's there, keep in mind you don't know shit about stocks. None of us do. None of us can surely know what's going to happen. And basically the majority of that is just for clearing options. Remember how important the options market is. In many cases, the option market, people are making 1,000%. That shit happens daily in the options market. It happens a lot of times, even when a stock only moves within like $1.50 range, like Apple can move within $1.50, $2, and people are making hundreds of % on those moves. And more than once a day, in many cases, as it bounces back and forth. So let's look specifically at SEEL, S-E-E-L. Sorry about the long introduction. It's just we all have to remember where we came from. And we come from a place of retail. We are retail investors. And there's a much larger group of investors that controls everything. And the attempt is, of course, either to get on the wave before they jump in and create, or, you know, before they jump in, splash, and create the wave that's going to help you make money. Or, you know, you're late to the game, but the splash they made was so big that it literally still has ripples coming off it. That'd be like catching the back end of a big jump and then getting a small bounce out of it. Looking at SEEL, S-E-E-L. SEELOS. I'm pulling up pictures here because we're going to talk about this. So in SEELOS, you have this thing fighting with the 371 range. I said that on StockTwits, added a lot of followers today. I want to tell you guys I'm very grateful and thank you for following. What that means is you're paying attention. And in addition, it means we're opening up an opportunity where we can work together. Very unusual. A lot of people don't really see the market that way, but a bunch of retail makes an institution. Don't let anybody tell you different. A bunch of retail making the same decision literally drives institutions. So do not be convinced you have no power. You just have no power alone, okay? And if you find somebody who can see stuff the way the algorithms, the computers, and the institutions see it, they might be able to, in this case, I may be to, by the grace of God, lead people to a place early before the splash, or not necessarily late, but fashionably late at the right time after it so that you can catch the ripples. I'm not saying I'm some kind of specialist, but I'm telling you that's what I do. That's the thing that I do. That's what I look for. So you can call me whatever you want. It's not a day trader, and it's not really a swing trader. It is an early opportunity finder. It's this whole new thing that I try to, I mean, it's not new. It's one of the oldest things in the book, but there's no name for it, okay? It's just, let's go ahead and go into SEAL. 371, they're protecting this. Why? If you look at the picture I posted on StockTwits with the arrow pointing to the red, that is the 50-day moving average. I'll snap a picture of it here on my iPhone in the TD Ameritrade app. And in this, you will see that there is a blue line that come up. That is the 20-day on the daily. Remember that. You got to look at the 20-day on the daily. So you got your 1-day chart up. And your settings, of course, for the simple moving average are 20, 50, and 200. That will give you a blue, a red, and a pink, as you see in all my pictures. Blue being the 50-day, forgive me, the 20-day, red being the 50-day, pink being the 200-day. Every time you change a time frame, 1 day or 5 day or monthly, not until you get approximately 1 month to 3 months are you even seeing the long term. When you're selecting the 1 day, it gives you the averages over that 1 day. Okay, and then the same thing with the 5 day, the averages over that 5 day period, which drastically changes the position and the strength of a line. That's what people tend to forget. Think of your 20, your 50, and your 200 as support beams. This is like building a fucking house, people. They're building houses. That's what they're doing. Because the algorithms need a platform and a foundation, meaning platform, not the fucking digital platform. I'm talking about a literal, like they built a platform to protect and bounce off of or treat it like water and create a tsunami or a wave. Tsunami or the wave would be these ridiculous runs that just kill shorts the whole way through. I know, I try to make these videos like, trust me, dude, I wish I could shorten these videos. I just won't shut my fucking mouth. So listen, 370 is what they're protecting at SEEL. The reason why, meaning people are protecting it now because the shorts don't want to get squeezed. So at 370, they're selling. Remember, these shorts were bulls. They were bulls. Shorts are almost always, in many cases at least, bulls that have changed their mind because they made a bunch of money and they have a lot of profit to now risk. And so they just turned. I'm shorting this bitch on the way down now. I'm the one that put it up and now I'm going to short it on the way down. So when people say, oh, it's profit taking, well, yes, half might be profit, maybe more, but much of it is continuation of profit. They wrote it up, and as they're riding it up, when they realize they're about to sell, they shorted at that position, sell into it, and fucking potentially just go slam into a wall, drop back down, boom, and then they're making profit both ways. It's what the algorithms are made and programmed to do. And so when you look at that and you see, a lot of people might have said, yeah, it's kind of funny that guy said that, because maybe they don't follow me or know me, and they said, it's kind of funny he said that because it really did, after all that excitement, it really did come directly back down to this line and hung around it the whole time. Why? Because they're fucking preparing for war. They're preparing for war. It sounds like not a big deal. It's a low float stock, 6 million shares. This thing can boom. That's why it boomed before and went to 7 so quick. Because this is a low float boomer with a 200-day, which would be the pink line, sitting at $8. And that truthfully is really the only form of resistance. Sorrento flew the way it did when it smashed. I said to everybody, watch, that pink line is where it wants to go. But it's also resistance. Well, a lot of the fucking systems and people thought like me and said, that's resistance, 420, that range of 420 on Sorrento's the resistance. So they say, boom, short it there. Well, then the algorithms pick up that heavy on the short and they go, buy, 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 buy. Fucking make them all cover. And it was just boop, 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 boop. You'd see some covering, it dropped, then boop. Why? Because that's what they're doing. It's an amazing strategy to sit there and just beat the fuck out of a wall because you know there's so many shorts they're going to cover. They're not going to risk this shit. And they just flip. And who do you see show up a lot? Goldman Sachs. Check in that. I'm telling you, that bank is so fucking powerful. This bank they just found out that they were wrong on 100 million errors on their reporting books. 100 million errors. They just got sued for that shit they pulled in. What was Taiwan? I forget. I don't want to speak out of turn, but it's like $2 billion they got to fine. I mean, this bank doesn't play. This is a boss on the street. He's just a general, a financial fucking boss. Okay? If you check your level 2 and you see them there, I don't give a fuck if you understand why they're buying on both sides. I don't need to hear that stuff. If they're there for a reason, because check all your level 2s. You're not just going to see Goldman Sachs and they're showing their name and with showing their MPID when they can buy and sell from the dark pool. Are you crazy? They're showing up to be like, boom, bitch, the fucking gorilla's on the block. He's going to come take your shit if your shorts start covering. I mean, it's just, that's the way it is. Because people know, even institutions know, they literally could throw more money than other people are worth at any stock. Not that they would. Makes no sense. You'll be realistic here. But the game they're playing is the short-long game, meaning they'll beat you up for weeks if they have to, but they're going to get what they want. And so consider that they showed up on Sorrento, it blew. Now it's showing up on LPTX. I don't even know what LPTX's name is. I'm about to talk about this stock and I don't know anything they do. I know nothing about what they do. I know it's a shame. I'm smiling because it's kind of bad, bro. Like, it's kind of bad. I don't even know shit about the company. But when I saw the chart, I was like, strange. Atos bounce, AKTX bounces. You got SLNO bounce. You had Achieva bounce. You had ACHV. And they're also low float. Got a drug for quitting smoking, anti-smoking drug that they're out pushing on people, and they may find some success with that. But you have to think of it this way. All those bounced. I mean, forgive me, all those blew, and all of them bounced except them. Except, let's see what their actual name is. I can't bear to do it anymore. It's such a shame. They're like, why would he make the video and not even know its fucking name? So dumb. LPTX. Well, the reason why we have to check this, of course, is because Leap Therapeutics. What do you know? That's its damn name. All right, let's see. Taking a look now at the 1 month chart. Oh my God, look at the 1 month chart. 1 month chart going back to, I should freaking, hold on. I'm going to record this now while I'm doing it so that I'll already be able to be put into the video. Just going to record my screen. So look at this, boom. They go back to March 6th and they are just stair-stepping it up, right? And then when you get to March 14th, they kind of have a drop back down, and then it's a stair step up, big stair step up on 15th and 16th of March. 16th being the day it hit the 297. It comes back down stepping, right? And nothing else. Nothing else. It hasn't went back up yet. Now Goldman Sachs shows up, and immediately when they show up and I start identifying them, it goes from $1.80 to $1.99, which literally was the ask they had, which means they already showed up and started bossing bitches around, laying down 10,800. It's like, come get this shit now or you're fucking trapped. So they're going to check and see. They got to find out, is there some balls? I'm going to pull up AKTX real quick, meaning do the other people have balls to stick around and try to short this thing even though I'm here? If they turn and go the other way, maybe Goldman will help it rise up, meaning they'll just buy into the buying, just drive that frenzy, which they're very good at doing. You have to have mad respect for that fucking bank, dude. It's Goldman Sachs, man. All right, check it out. So, looking at AKTX, geez, look at that. It had its bounce. AKTX, 2 days after its rise. I'm going to stop recording. 2 days after its rise, you guys can check on this stuff. Do your own diligence. But you look at that, they had their rise, drop, and then a rise. And someone told me the other day, that's not a bounce. When I said, well, look, some of them bounced. Like SLNO bounced. The guy said, oh, that wasn't a bounce. I was like, bro, here's the line. Boom, boom. That's a 30% bounce. That is literally that is infinitely better than the Dow Jones did last year. Infinitely better. Why? Because if you made nothing and you lost something, anything better than that, so zero, you essentially made negative, so you made less than zero. And anything above zero, like if something's zero, anything above it is literally infinitely bigger. Because it's nothing, and there's small I know you're going to say small infinities inside of big infinities. So what I'm saying is 30% return should be greatly appreciated. And that is how you become a good investor, for being grateful, for believing in something bigger and better than yourself. To invest the fucking money, what are you getting it for? Take some of it and buy stuff. Just pay back people if you owe them. Like, I'm serious. If you do that, the money's so much more valuable. And you find better ways of getting it because you cherish it a little more. It's not the money's the root of all. Money could do very good for you and it could do for other people. And if all you're doing is playing this little rhythmic game with algorithms to get a small piece of their pie, you're still helping them make their money. I mean, to be honest with you, it's a win-win. You just have to know when to get out. And you have to know you will take losses. But if you take those losses like your bosses, then you can eat the sauces. I don't know what kind of sauce, but you'll be able to afford it. All right, check this out. LPTX hasn't bounced. I believe there's going to be a bounce. SEEL fighting for 371. It's just this weird spot because it's above the 50-day moving average if it opens there. And there's something special about opening up above your moving average. It's an important feat because it means you start the day, the busiest time of the day where the most crazy shit's gonna happen, and it could determine the rest of the day, is you're already there. You already have a support of the 50 under you, and you have the 20, you have all this stuff under you. The only thing above you is the 200-day moving average. You gotta play that. When you have that opportunity, just play it. If you're already in it. Like me, I didn't buy because it didn't come down to my level. I make goals and I say that's what I'm sticking to. I just want it there. If I can't get it there, it wasn't meant for me. There's nothing wrong with saying that, and it'll save your ass a lot because it takes that emotion out of the game. I still watch, but most of the time I watch because I want to keep up and see, because that helps me learn. So I don't run it to go, oh, look what I could have, look what I should have. I would look at it and go, that's maybe somewhere where I would have made this decision. So while it's running its course throughout the day, I'll watch and say, there's something I would have did. Thank God I didn't do. I would have done that. Thank God I didn't in this case. Find out why it was bad in this case. Oh look, averaging it out. 4 times I've watched something but didn't buy. All of them fell around 10:30 a.m. They all had a big dip. They go into lunch, they dip. You learn those little things and you figure out what makes those stocks similar, what makes those runs similar, and then what happens is you will miss some because you're going to calculate wrong, but the ones you get involved with, you can be more sure about. Don't just, when someone says buy something, buy, like follow them right in necessarily. You know, you still do your own due diligence. You always do that. You know what's comfortable for you, and if you do that, you know, you'll get your pieces. I'm over here trying to preach. It's so stupid. I'm not trying to. I don't have 50 years experience. But what I do have is a good mindset that I believe someone should have when they're attempting to invest money. Have a purpose for the money. You know what I'm saying? Make sure the money was right before it went there. It's just something about having all that stuff, because then if you start to take losses, you know, you can eat it better. You can eat it much better and learn from it. My God, if you need money so bad at the moment you put it in, that money's in trouble. There's just something about putting money needed on the line, dude. Don't put money needed on the line. So now that I'm preaching, I'm gonna cut this video short. It's a damn shame. Man, my son had surgery, and you know, it's been on my mind. I'm tired. I'll admit a bit tired, but you know, he's doing good. So life's good. Everybody's good. That's the most important thing, I think, is that, you know, you also find value in that stuff. But when I say because I'm preaching, I try to give you guys just the information. The information that might be useful to someone new, to someone asking, inquiring, wishing to know more. I know I talked about a wide range of things, but basically I'm saying I'm focusing on LPTX, Leap Therapeutics, which I know the name of now because the chart. I like the chart. I like that Goldman's there, and in addition to that, I like that it also has some room above where it's 200-day averages, and it's sitting on all 3 of its lines. That could be a scary thing. That means you could start being approached. You could be approaching VWAP, and if you break VWAP, it could collapse. This is what happened to Veristem. Is why I got out, because it didn't have the bounce that I thought it was going to have. And then it just dropped really bad over the next couple days. It's one of those things where you're putting something on a line, but a lot of people are going to be on that line, right? Like a lot of shorts and a lot of bulls are going to be at that line because they know that's where something can start. So think of it as like the true finish line. I mean, forgive me, the true start line. And as you see so many times, if you could be first to the race, you have a better chance, right? Because you're starting from the bottom. But a mistake there can be a quick fall down. And so I'll say LPTX is what I'm invested in right now, and just for right now. I don't know how long that's going to last. I'm going to see what's going to happen, but then of course SEEL seems like a crazy situation that can go wild tomorrow. We'll see. And then keep in mind the most important thing of all the things I said, it's why I said it first, the yield curve. I don't give a fuck what you're invested in. I don't care what you're invested in. If they decide to take money because they don't like the way this thing looks, and they remember first to the race, first to take off, the first at the finish line, you get the head start, and that also means getting out of shit before it collapses. So keep that in mind. That's the one that you just want to watch it. I mean, you know, you should know where that's at because they do. You know, so have the information they have. Anyways, I love y'all, and I hope you make money. I hope you, more important than that, I hope if you make it, you use it wisely. That's the best thing you could do with it. All right, peace.
Broken.